next question comes to us from someone who wants to stay anonymous. My question is about how to best prepare my parents for retirement, who are 50 and 60 years old and have little to no savings. My suggestion was to invest in a solo 401k and a Roth IRA and try to contribute 30% of their household income for the next 10 years, with about 60% stocks and 40% bonds. Is there a faster but still relatively safe way for them to maximize savings for retirement?
Well, first of all, anonymous, good for you for trying to help your parents. They're definitely going to be in a tough situation. You don't say whether they have a pension or not, but I'm going to assume that they don't, but hopefully they do. I would think this is a situation, I've talked on the show before how as a country we need to start thinking of 70 as the new 65. Like more and more people just really have to look at 70 as the retirement age. So you're right to suggest that to your parents, they should do this for at least 10 years. But I would say that's really only true for the 60-year-old. I'm going to assume that's the dad, since most couples, the husband's older. The 50-year-old, probably the wife I'm assuming here, is only 50. So I would think that she also would have to work longer and should shoot for 70 as well. Because if they're at this age and they don't have anything saved, they just need to look at working longer. I think a 60% stocks, 40% bonds portfolio is fine for the 60-year-old who's going to retire in 10 years. But the 50-year-old, if she ends up working for 20 years, I think you could go all stocks at this point, especially if you're just starting to save, you're just putting in a few $100s a month. Whatever happens to the stock market in the next few years is actually not going to be that big of a deal because you're just starting out. You've got 20 years ahead of you. And you're trying to catch up. I think an all stock portfolio is perfectly fine for the next 5 years or so. And the other thing I would just say to them is, I don't know if they own a home or not, but home equity is probably going to play a big role in their situation if they do, whether they downsize or they get a reverse mortgage. So another somewhat safe way to improve their prospects is to pay down the mortgage sooner so that they own the home outright. So then when they sell it, they either get more equity, or if they do a reverse mortgage, they'll get more from it.